Richmond Fed President Jeffrey Lacker says that, well, he said he objected to the Federal Reserve's plan not to sell mortgage-backed securities. Now, he's talking about the QE3. Nobody called it QE3. I called it QE3 because that's what it was. They went out and bought all the lousy, bad, below subpar mortgage-backed securities that the government was instrumental in securitizing. You know, the idea was they're gonna bring these mortgages on board. They're gonna buy them up so nobody out there is suffering. Nobody like the little people, like Goldman Sachs and J.P. Morgan and, you know, all these poor companies that have to struggle with these because they made some idiotic decision to buy them. But aside from that, you know, we save them. But now we're not going to sell them when there apparently is some sort of market for it. The Feds decided, well, we need to keep that on the books to maintain low mortgage rates and continue that as part of our economic stimulus. And Lacker said, not a good idea, and he disagrees with the policy. I give him a lot of credit for coming out and saying so. Lacker said he does support a planned approach in lifting interest rates, as well as the principle of the Fed that the Fed won't hold any more securities than necessary to implement monetary policy effectively. Lacker says, look, I'm okay. We can hold some securities if it's going to help implement our monetary policy. But aside from that, which this does not do, aside from that, let's get rid of them. We're not in the business of buying up securities and holding them. Thank you, Jeffrey Lacker.